Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. It is. What is it? It is Monday morning in the United States. So, now what's the mechanics here wrong? 1 minute seems alright. Okay, there we go. Anyhow, it's Monday, so we are starting a whole new fun week. Bonds have been rallying. In other words, interest rates have been dropping. That's been making everybody happy. You can see there the dollar index generating a little red dot there today. Up on J4X, you can see it's just starting. You can see up on the top of the Hinky Ashki, there's a little red right there. We've got the fast moving at 67.30, and we got the slow at 72. So it's breaking down. Also, we're seeing that weakness. And you can't see that. Let's do that. There it is, right there. Excepto Mundo. There we are. Something's wrong there. Go down, minimize. There we are. And so you see that pressure that's there. And what else can we say about any of that? It's the same way too over on the dollar index on the old platform that we still use as we are. It's still the main platform. Let's look at that. It's got that. Let me just fix that at the same time. Let's move it over to that too. Right there. And let's fix this. Just need to change the data that's coming. In other words, what sequence, the morning or the evening or 24-hour. It just jumps around like that. See, that's just Friday right there. And then we go back and we do it again. We put it into 24-hour like so, and you'll see in a few seconds the difference again. It'll show today. Well, when it makes a tick, it'll show today. That's what we have to wait for, is the next tick, and then it'll fill in, and all of a sudden the bar will jump up because that's Friday, and then this will be Monday like that. What else can we say about the dollar? To a great extent, the dollar has been following the pressure of the pressure with the interest rates, and we have I think it's CPI comes out today, and then PPI comes, or no, I guess it's CPI comes out tomorrow, and PPI. Sometimes they flip. It's really odd how that does that, but that is going to be the another kind of directional to the inflation that everybody's always concerned about. With the financial markets, they're hoping, like that there's, I've seen headlines, we've talked about it here, there's a battle between the Federal Reserve and reality, I guess you could say. Because, and that's a bold statement when you think about it. Isn't the Federal Reserve really supposed to be reality? Aren't they the ones that are supposed to be, not making the strange decisions? In other words, reality should be making it more. In other words, the importance of things. But instead, they're trying to slow the economy down to get rid of the inflation. At the same time, they're pushing everybody into a recession. And then they're hoping that they can go lower rates somewhere going into anywhere between March and May. And that will ignite the economy for the election. I mean, talk about physically, blatantly doing these things in front of everybody is ridiculous. You can see how bad that is. As we take a sip of our coffee here. And so when we look at the actual technical analysis of it, we're looking at the dollar index there. You can see it's still moving up. And what we can do is let's just take a look at the bonds. See what the bonds are up to this morning. And there's a 30-year bond. You can see it's trying to roll over a little bit this morning. There it is, right? Oh, that's Friday. So we got to fix that too. Let's get that fixed. And I guess, wait a minute, we are, that's a December contract. And wait a minute, so I don't even think they're trading the Decembers anymore. We need to change that as we speak live. Let's do that. Let's put the March contract in there, because at this point I know the December contract probably has almost, it's already exercised. I would think we're in the 11th day. They usually do the switch in the first week, and I guess we were not paying attention to it. But now we're at the point where the switch has probably occurred. So let's get the switch going, and that's ZB, and we're going to look it up. And get the March contract in there. Let's see, right there, March. There we are. Add. Okay. And then close. And there it is. And there we are. And there's the March contract. And then let's put the weekly in there. ZB. And we'll see what the interest rates look like this morning. There we are. You can see the daily, and that's Friday still. We need to get the 24-hour in. But you can see that the interest rates are trying to rise going into Friday. That's what that means. When the price starts to go down, interest rates are rising. I know it's a strange thing. It's the price of the bond versus the rate itself. There you go. Okay. So yes, today we're starting to move into the sell there. You see that right there. And you can see it's dropping below the zero line. So rates are rising. Now normally, normally you would assume that the dollar is staying firm. And you can see here, we are flirting. Let's see, let's go back over to the, let's see if we have the dollar now updated. Dollar index itself. Right there. Oh, you know what? That's a December also. We need to flip that over too. There it is right there. Dollar index. We'll take care of that also. Start to move that into the March contract. But you can see here, it's up a little bit. There's some strength there. It's flirting with the sell. It's got a green and a red. We got the same thing going on with the beta. And there. It's trying to get into that sell. You can see that there's some pressure there. At the same rate, we have interest rates trying to go up again. That's what that means. When the bond price heads down, that's what this is right here. We're looking at the price of the bond, not the yield, not the interest rate itself. This is the price. You can see we've been doing a good, push. We had a drop on Thursday. Friday was, a gap down, and here we are, a little bit more weakness today. And so that's, let's just switch that over again. Right there. You see that. So Thursday, it backed off. Friday, the price of the bond was down again. Today, it's down again. And that's what that is, and that's why we're seeing the weakness developing here. And let's we could fix the weekly, but since we're just talking about the daily at this point, we won't worry about it too much. Morning, Robin. And so from there, we go back to the dollar index, and we say to ourselves, okay, what is going on? We're coming to the end of the year. We talk about that constantly. We've got the political spin going on at the same time. In other words, as I said about the Federal Reserve, they've hurt the the economy itself. And then what they did is they hurt the economy itself to get the inflation down. And the inflation is still rising. That's the problem. Inflation is still rising. It's not dropping. In other words, the rate of it increasing is slower. That's it. The rate of it increasing is not as fast anymore. That's all. But it's still going up. And that's the problem. And inflation always is kind of marching up. And the difference between inflation and interest rates. So in other words, when the economy's GDP is at 4 or 5%, and inflation is around the same area, 4 or 3.5%, that's a you subtract one from the other, and the next thing you know, we're not growing at all. So in other words, during the Trump years, we had 1.4, 1.5 back and forth inflation, and we had 3% GDP. We were growing twice the speed. I know it's a lot of math and a lot of confusion, but that's why the economy was so good, is because we had inflation growing at only a quarter or a half of what economic growth itself was, whereas now we're in the reverse situation. and the Federal Reserve from Richmond, which usually follows the GDP, is saying we're going to see 1% GDP through the next couple quarters. And so that's the problem, is that inflation's at almost 4%, or a little over 4%, the core rate, and GDP's at 1%. That's called stagflation. We're stagnant. We're not growing. And so that's the magic of it all. All right, that was another sip of coffee. Just finished that one off. And let's go over to the euro itself. Let's see what the euro's up this morning. There we go. There's the euro. You can see that euro has been a little of a surprise, the way it's been dropping further down, breaking this area here. But we would assume this would be the strength right here in the 106.5 area. So, nothing bad. And you can see the daily is trying to climb. We never left the weekly buy. You can see that all right there. So, it's not the worst thing in the world of that little sell-off we've seen. I can't emphasize it enough, and I really do believe that we see the weakness in the euro itself is because of just end of the year sizing up, adjusting for the economy, that type of thing. Everybody likes to start at zero in January. They want to start at zero when it comes to having a position or earnings, the gain or loss. They want to start over again, and that's what they try to do. So they size up their position, adjust it, and then start over again in January. And right now, the position, the more than likely, is the money managers are trying to end the year, or they've had ended the year already. The most they're doing is they're buying companies that have had great years, so that they can say, well, we had a small position in that stock. We're pretty happy. You see, we're up overall for the year. We didn't have the full position we'd like to, but we've added more, and so they play that game. That's what window dressing is meant. That phrase means in the financial markets. They're window dressing. They're trying to. They didn't have the stock that was up 170% for the year, but they had. They only had they were underinvested in it, or they had no position at all, and they've been adding it for the last 3 months, and trying to, at the same time, they're doing it during what we refer to as tax selling. What happens is that funds that have had that stock and made 170% or 130% up, or they had NVDA that was up 200%, they sell some of it so that they can offset their losses with that gain, so that they pay less in taxes. Taxes are a real bad thing, they don't do a really good job economically in a free market system. They force people to adjust their positions to their tax bill, and taxes to a great extent are just not the success that people think they are. Taking money from one group to help another group, in the end, is a loser. If there was no taxes, then it would be donations. People would donate to different groups instead and keep the government out of their pocket. But unfortunately, that's the way it is. So that's what makes these markets, these last 2 months, very strange. Doing strange things, hitting lows, taking out the lows, going to new lows. Then all of a sudden, you find 3-4 weeks later, they're trading, near the highs of the year again. It's like, wait a minute, what forced them to go off course that much? And it's all the taxation, unfortunately. All right, from there, we'll go over to the British pound. Let's see what the British pound is up to this morning. And there it is right there, GBP. You can see right there, it's trying to lift up. It is through the buy number already. You can see that right there. The weekly has been very strong. The green line down on the weekly just bounced off the manifold itself and kept on rolling along. Take a look at that on we'll take a look at the future contract on it. let's see, no, it's a ZBC. Where's it at? It is futures contract is B6. So let's find six. I'm 6B. That's what it is. 6B. Let's see. Where's the 6B? There's 6L. There it is. There it is. And you can see right there, that's the futures contract lifting up the same exact way as the spot is. Let's show you that. And let's do it as we got that mouse. Let's go over to J4X too at the same time and put that in there. You know, it'll be interesting. Let's go back and look at the euro and see what that. We didn't look at the euro that way. Let's do that. So there is cable. You see it's starting to turn. It's getting there. The fast is already above at 32, and the slow is at 20. So it's showing you the strength. We just need the hinky ashky to turn green. Over here, you can see it's doing its job too. It's both are through, no red anymore. It is bouncing up, and at the same time, the weekly is smiling and saying, "Yeah, we like that." Now let's go take a look at the euro and see what that looks like right there. You can see that it's doing the same thing, and it's at 24 versus 17. So we got half of it already there moving into the buy side of it. And then we go over and push, where's that? Right there again. Let's do that. There's the euro. You see it's trying. It's at minus 0.00012, just underneath the line. The weekly is turning, giving us a turn there, and it didn't go into a sell to begin with. And then let's dance our way over to the futures contract and just take a look at that. We get a real view of it all, you know. And there it is right there. You can see it in the beta is trying to turn up. It's just minus by a hair. It's still red there. You know, doing that same thing as the J4X at this point. And the same thing over here. Over here, you know, flirting with that same thing, minus 0.00008. See it right there? So pressure is on that. All right, now we'll go over to the Swiss. Let's see what Mr. and Mrs. Swiss are looking like this morning. Right there. And you see that has been moving up. The fast is at 80.7. The slow is at 78. And let's put it up over here. There it is right there. Still in the buy. And the weekly, the fast is moving up to the zero line, but it still hasn't pierced it. It's up very close. Minus 0.00023. See right there. It's very close. And you can see the slow not really caring. It's turning over again, which is a positive thing. Remember, when this is going down like that, it's gaining against the dollar. You know, right here it was gaining against the dollar, losing against the dollar. Down, gaining against the dollar right there, gaining against the dollar right here, losing right there, gaining against the dollar with that big drop, and right now we're losing against the dollar when it comes to the Swiss. So that action is telling us, yeah, it's not roaring up, it's up, but this is what I would think more of as a dead cat bounce, especially compared to last year. At this time last year, this product was trading at 101. Not at 88. They were having problems with Credit Suisse. They were borrowing capital from the Federal Reserve of the U.S. to balance out their books. You know, again, that end of the year thing. They worked out a deal where they found, I think it was UBS that bought out Credit Suisse, most of Credit Suisse. And they split it in 2 or 3 pieces and found buyers for it all. And that was it. All done. You know, they made a marriage, in a sense, of corporations, and that's what happened last year. Now this year, you know, we're 10-11% better than last year at the same time, and so we're seeing that the Swiss itself is, you know, just a small dead cat bounce just for the end of the year adjustments. It'll probably join in again, doing the same thing going into the new year. That'll be a whole new market, no taxes, you know, the whole bit. I know it sounds odd because, you know, I talk about taxation, with trading and technical analysis because it's such an influential fundamental that we don't have a choice. It's there. It's not like I'm pushing for one agenda versus another. We're just stating facts. It's taxation that moves these markets these last couple months to adjust for the ending of the year, because everybody knows you finish off at the end of this year and then we start over with a fresh look at next year. So it's not like we like talking about taxes. It's just part of the process itself. We don't have much of a choice. From there, we go over to. I mean, when you try to understand, like, you ever see that the trader's guide? It's like the farmer's guide to trading and the farmer's guide to weather, and it's just a cycle thing that we know it happens every year. It's just the way it is. Get towards the end of the year, people who have been making money sell it, and then they go sell the ones that they were losing money on, and it offsets so that they don't pay taxes on the ones they gained because they sell the ones that they lost on, and this way they're kind of like zeroed out. Instead of when you get taxed, you have to take money out of your pocket and pay that tax. So you try to balance it with the loss. I know when you think about trading, in many ways, there's a lot more facets to it. That's why the professional managers get paid decent money just to manage the money itself, so that they're not losing on the from other influences. All right, from there we are looking at. Let's go to the yen. The yen has been interesting. It's been that was really wild there. And I mean, when it goes down, same thing like the Swiss. When it's going down, it's gaining against the dollar, and you can see, wow, there was like a big push. 2 days, two trading days back. No, it's on Thursday of last week, or 3 trading days back last Thursday, and then you can see here's Friday right there. It bounced up a little bit, and today it's trying to climb back into that situation. Matter of fact, why isn't that line? There it is, like that. There it is, right there. So we're still we went into the weekly sell back in here. You can see that right there. Went into that weekly sell in here, and then it went into a daily sell right there, and it was like be short, and then we got a buy there, and then it you couldn't go long, and so you missed only gained from that. If you're trading option derivatives, you can have a bull spread or bear spread on and make out better, or binaries. Binaries and bull spread, bear spreads are the easiest overnight way of being in a position. This way you don't, like in this case here, if you can trade the weekly more and not worry about the daily when you can do the options. So let's see. So there you go. There's the yen, and I'm not sure. We've seen such, from the LDP. That's the party that's been running the place in Japan for many, many decades. We're seeing all kinds of situations go on there. We're seeing the stock market now moving up over the years. The all-time high is at 39,000 back in 1993. And we're starting to see it's been trading in the 35s, 34s. I think it's at 33 and change. Let's go just take a look at that. Nikkei. And basically the central bank of Japan, the Bank of Japan itself, owns something like a third of those companies in the index itself. And some of those companies, they own 50% of it. Instead of them buying bonds, they buy the stocks and take the dividend. Let's see if we can find it here on the beta, because we can show you that. There it is right there. And we'll show you what the stock industry has been doing in Japan. There's a lot of noise over there in the sense of being pulled in different directions. And there is the 34,000 area it was playing with. And the all-time high is 39,000. and you can see it's fallen back down to the low 32,000. And at the same time, you can see the action in the currency over here on the right. You can see that movement, and we can see it over here on J4X. Let's put that up there. There's J4X, and you can see that, this is gaining against the dollar, and at the same time, you can see the stock market. For, I guess, what is that? That's from is that October? The end of October. Let's see what we do here. Yeah, so there it is right there. There's November, there's October, and so you can see in October here it started to climb like that. That's the currency, and then the currency topped out, and now you see the currency topping out, and you see the stock indice topping out at the same time. So they're chasing after each other. The currency itself, that high point was a 45-year high in the currency. 45-year high. And you can see it right there. They have the 151.50, right? Or 90, I'm sorry, right there, almost 52. That's the currency right there on your left. That's the stock market on your right. You can see how the Nikkei has been, following that all along. And looking at the pressure on it just tells us that this currency is definitely, in this case here, you can see there's been some positive things obviously going on. In other words, the policies, they've changed the head of the Bank of Japan about 9 months ago. They've changed the finance minister last month. They've basically put pressure on the LDP to stop taking contributions from private sector. So, you can see it in the currency, which moves the stock market, that they feel that there's some positive economic things going on inside the government itself, and that's important because we see these policies have been just like when we look at the Great Experiment. After we go from here to the Turkish lira, the change by government policy can be very influential on your currency and in your stock indices, and makes things a lot different than people realize. All right, now from there, we'll go over to the Great Experiment. Where's it at? We'll put up on J4X first. And this is the Euro Turkish Lira. You can see it's been moving down. That's always positive for the population. The all-time high is in the 31.85 area there, they're showing. We've seen it as high as 32, so that might be a close or something like that. We did all kinds of closing highs throughout this whole move. The product has been, been in one tough situation. Look at that. Going back to the first quarter of 22, the product was trading in the 19s. It's gone up over 50% in value in just 1 year. 1 year. And when we go and put it on a weekly basis, that's why we call it the Great Experiment, because we're watching this real time. We're seeing government policies and strategies economically. You can see right here, there's 2020. The currency was trading in the sixes. Right there, sixes. And you're talking about, that's why we call it the Great Experiment. I mean, that's phenomenal. It ran up to 31 from 6 over a 2-year period. So, 6 to 12 is doubling, and then doubling again is 24. And then adding another chunk of 6. It's doubled and tripled and quadrupled. The poor thing is, people who were buying things with 6 Turkish lira are now spending the same. They're spending 31 Turkish lira on it now. It's like over a 2-year period. Talk about an explosion in inflation. And this is the attempt by the government to have a new, unique policy that will make the country better economically. And so I guess you got to figure out what that policy is going to be and see if we can get that thing down to 15 again someday. Cut in half, because it's gone doubled and tripled and quadrupled on the upway. So, all right, and so from there we'll put the daily back up there, but that's why we call it the Great Experiment. We're watching it live, that action in it. And so there it is right there. The Turkish lira is doing something good here. It's turning down. And It could be tax selling in other countries. It's people who've had that currency, people in Europe, and they're taking their profits. They may have been shorted, and now they're covering their short, taking all those profits. Because remember, this going up means that it's losing value against their pairs trade. Now, over here, we'll take a look at the Turkish lira on the old platform. Right there. You see, same topping out thing. And we've been in a sell for there, just like here. There. Right now you see it at 30.6 versus 20, so it's trying to do a little bounce in there. You can see right here we are already starting to make that bounce as we go and look at that. Let's see, where is it? How do we widen this? Right there. So you see it's jumping through the zero line as we speak, going back into the buy. This should start to turn. You can see this has turned. The slow stochastic is trading at 19,975, and the fast is at 30.315 as we speak. So, oh wow, it just jumped to 30.55. 6/6. This thing can run hot. Whew. It's 30.7. I mean, this thing just can be, it can run very hot. It's a wild creature. Some currencies don't, what it moves in a day, some currencies don't move in a year. That's the amazing part. So from there, we go to the first major brick. We watch that. Oh, here we go. We got somebody. There's Mountain West. Good morning, Mountain West. Let's go. Should we go take a look at your top or your bottom or something like that? One of the things. Let's go take a look at it real quick. There it is right there. And so the Mountain West bottom right there, has found a way to just keep on climbing. And interest rates are rising, so this thing is climbing. And that's it right there. You see the weekly still hasn't turned yet. So we're, the fast did. You see the fast is up. It's through the zero line, but the slow is not carrying. So we think this is just a dead cat bounce, and we'll start to see this thing. This could be a long big A. Where's that mouse at? Let's do that again. This thing could be a long A. This is the B, and then we'll just do a C and start to head back down to that 98, 99 area again. Mountain says, what about the Dow Jones going up or down? Let's go take a look and see. Up and down, up and down. There it goes. You can see that has been very strong. You can see it. There's the Dow Jones future. We've been in a buy since daily buy there. That week it climbed. Where was it at? It climbed in together right around in here. So from the 33.8 area, we've moved as high as the 36.2 area, and we had a little sell there for a short period of time on a daily basis, but not the weekly has been in that buy since right in here. So not too bad, nothing, nothing to worry about. Then they reached for what they call the big cap stocks, and that's what the Dow Jones really represents. It's 30 stocks, and they are the most capitalized, the biggest companies on the planet, traded in the United States. That is, and so that's it's the Dow Jones domestic. They have international indexes and so forth. The S&P 500, a good example. 50% of the stocks in the Dow Jones, the S&P 500, in other words, 250 of them are foreign nationals incorporated outside the United States, and then almost 250 are domestic. And so it's almost a 50-50. I think it's like 50.3 versus 49.7, but we just rounded out to 50. And so, we see that the that index has been doing pretty much the same thing. We can look at that also right there. Same thing. And you can see right there, it climbed into the buy in the 40, was it 4,380 area, and now we are been hovering on the 4,602 area at the moment as we speak. So it's been that same flavor or action to it all. The stocks are, I would assume it's mostly window dressing. We've probably seen most of the tax selling at this point. That's probably why it's stalled out right here. All that. Let's get that mouse again. Why the stock indices stalled out right in here is it's the tax selling situation. And then this was probably even more of, the classic October-November tax selling. They try to get it done so that they can take gains. They're taking gains from the year, because when you go back and squeeze it tighter, let's do it on J4X. It's always fun. J4X is very easy to move around in when it comes to the actual price action itself. So let's put the Dow Jones Industrial Average up. Right, I just saw it. There we are. There's the Dow Jones Industrial Average. And you can see, it was climbing throughout. Here's the whole year, starting there. Basically, that was the beginning of the year, down in the 31,400 area. Climbed up. That was in the middle of the summer. Is that right? Yeah, that's right. And so you can see right there. And then they started trying to take some tax selling going into all the way down to where's that? That's October. September, October, and November. That's usually when you hear about like crashes or markets getting sold off. They're taking a lot of those gains and they're selling. What they do is they sell the gains and some of the gains in their portfolio, not the whole position. Just like if they had, let's say they had 1 million shares of something that gained like 50%, they would go and sell, say, half of that, so they'd only have 25% of it, and then they would, at the same time, sell losers for the year in their portfolio. And this way, they don't pay the profits in taxes, and so then it bottoms out. And now this is the window dressing right here. At the end of the year, the last 6 weeks, they start to reach for the stocks so that they can show investors that they are invested in those big winners for the year. Now, that's other funds that have missed the boat. Most of the funds this year are under the gain of the year. In other words, they didn't beat the S&P 500. They didn't beat the Dow Jones Industrial Average. They underperformed it. So what happens is that people who invest in these funds, when it comes to the hedge fund side, will actually start to plow more money into the hedge fund, thinking that they're buying the low, selling the high type of thing. Whereas mutual funds and retirement funds, that they never seem to get rid of the money managers to begin with, no matter what they do, have done that tax selling also, trying to adjust the best they can. And because they were underinvested to begin with, now they have to dress the account up to show the investors, in this case, it's slow money, what we call slow money versus fast money. Hedge funds are fast money, and retirement funds and mutual funds are slow money. And so they're investing for a 5 or 10 year period, whereas hedge funds, they're investing for literally weeks and months. And so it has that mechanical action. That's why we talk about inflation and we talk about tax selling and all that stuff. It's all the mechanics. So, and that's what you see there. There is the Dow 30. Now, when we go and check out the S&P 500, which is the global index, really, it has that same look to it. Not as high as you can see right there, and that's where it started at the beginning of the year. It was in the 38. Going on 3,900 area, and it's had that nice big gain, and they pulled it back, took some profits, and now they're window dressing the rest of it. And so there it is right there, looking at the Dow Jones Industrial Average and the international flavor of it all too. All right, from there, let's see, we were going to the South African Rand, but I am very happy to look at anything at any time. So traders like Mountain West did, He said, I want to see something on the Dow 30. We went into it, and we even explained the tax situation and showed you the international situation at the same time, because they charge taxes in other countries also at the end of the year of the position this year. So it's always that game that's always going on. From there, we'll put up the South African Rand. We're taking a look at the BRIC nations at this point and their performance and the metals, especially the South African Rand. South African Rand, is that's the whole year, and it's been really sloppy. There's been some political problems. So normally, the South African Rand is almost lockstep with gold. And let's put the gold up on this screen right there. And there is the gold. And you can see, let's see how much we can tighten this up, since this is like new contracts every 4 months. So there is gold all the way back into September. There's gold all the way back into June. There it is in March. And there it is at the beginning of the year. So gold was down in the 18 area, 1850 area. They made new lows here. And you can see this was, it's interesting is that when the South African Rand rises, it's losing against the dollar. This is making against the dollar. And when it gains against the dollar, normally you get nice moves in the metals complex. So basically from, what was that? That was, let's widen that a little bit. Matter of fact, let's just move it over a little bit so we can try to get a better feel for it. So that was this move here. Gold should have gone up, pretty well. It was losing against the dollar, and so it should have gone down, and I believe it did. It went, let's see, right there is the beginning of the year. It went down there, and then they rallied it and brought it down again, but it gained. It was picking up value. It went to 2100 back in, is that right? Yeah, so there it is right there. There's November. There's, let's see what that is. It's August, all the way back to the beginning of the year. So it ran up at the beginning of the year all the way up into April, touching the $2,150 area, all-time highs. And then they went, and from May all the way down to October, they sold it down. Now, here's the South African Rand. So from May, you can see from May, the South African Rand gained and lost against the dollar, and that's why at the same time gold went down in price. Then in October, right there, it bottomed again and made new lows for the year, and then now it's made all-time highs again right there. Now at the same time, you can see here, and it was losing against the dollar, but it didn't fall that much apart. So if we can now we want to tighten this up. So there is September, and that is like October right in here. And you can see it was losing. The South African Rand was going up against the dollar, which means it's losing value, this whole thing right there. But we had gold. Where's that at? That is July. And you can see here in July, we topped out and we lost in the metals complex. That's why we watched the two of them. And then you can see right here in October, when it bottomed, that was the odd part, is that in October, there's October, when it started to gain against the dollar again, finally they joined in again and started working better. And this last, you can see here, it's kind of interesting. It's been gliding up since the beginning of November. But we kept on gaining in value throughout that right there, all the way up to new all-time highs, which was odd. So the South African Rand was losing more because of the political issues they have down there than it was the gold and the value of metals. But normally they work really well lockstep. They tried to get rid of their president last year. They asked him to resign, but it didn't seem to work. He said, nah, I don't care. So that's why the currency, we think the currency should be down in the 14s, and we think that that would have even added more strength to the metals complex. Let's move that back over a little bit again, and then we go from there. We shoot over to the, that's gold, so we widen that out so you can see it cleaner. And at the same time, just want to resave that again. You can see it's moving down again today,
Market
like it
data
did on
connection
Friday,
lost.
went into that daily sell. But we're still in the weekly buy, so it makes it very, very hard to deal with that.
Market data connection
And the South African rand is
reestablished.
not exactly, it's, you can see it's trying to lift up. Today is higher today than it was on Friday, so that makes sense there. It is following the currency again, but it doesn't do it as solidly as it used to. And when we look at silver, you can see silver has been breaking down even more. It's been in a sell for, it's at 6 days now compared to Mr. Gold. The gold, went into the sell the same way and then tried to climb up one day and then back. So pretty much they both have been selling, but the difference is that silver, as you can see here, has been much more weaker. And we kind of think that what we're really seeing is that the metals, particular silver and platinum and so forth, are much weaker because we think they're selling them and buying gold. People don't want to do, they don't want to be missing the gold. They want to have the gold position on. And that's why, unfortunately, the silver-gold ratio has been very poor. And when you look at it here in the copper market, copper is more of a manifestation of China. The growth in the economy is kind of weak. And they're having major banking problems and real estate problems, and so forth, and they're not growing, and so you can see that copper's not at $5 like it has been. It's down at $3.80. So that is really the real pressure. There it is right there. And that's copper right there. So we'll go save that too at the same time. There we are right there. Save the copper. So that when we look at the South African rand over here, and you can see this upwardly move, in other words, it's losing against the dollar, that would be putting pressure on gold. And we're starting to see some of that pressure, just starting. But even now, it's still in the weekly buy. Same thing with copper, still in that weekly buy. And I guess, did silver? Let's just take a quick look at silver again. Is it flirting with the weekly? Yeah, see, it went into the weekly sell on Friday, but it's trying to bounce up again. So Friday goes into the weekly sell, and then today it's trying to lift back up again, or this week. And so you can see here, gold, not really worried about it at all, is it? It's went down, but it's bouncing up with the rest of them. Definitely people, gold is being, consumed, being bought. And you can see here, this is platinum. Let's fix that a little bit more. Let's see what today looks like. You see there that they're still, there we go. And there is, yeah, look at that. They're trying to lift, just as they threw this into a sell on Friday in platinum, it's trying to lift again. There you go. All the metals are reaching. They're reaching for the metals. They're buying the metals. They're concerned about the metals. Obviously, they're upset about the way the economy is going and the geopolitics of it all. So it's putting some pressure onto the metals complex. One thing for sure, they don't seem to want to really sell the metals that hard. Well, when it comes to silver and the rest of them and platinum, yes, they sell it hard. But they don't sell the gold hard. It's the opposite. The ratio of gold to those products is lifting up. In other words, it's in favor of gold. There you are. Now, from there, we move over to the energy sector. And let's check out the energy sector. And let's see what's going on with crude oil this morning. And there's crude, trying to lift up a little bit. You can see it's flirting right now. It's just making that into the buy side right at the moment as we speak. And then when we go and look at it on Brent, let's go see what Brent looks like. And we usually look at Canadian dollar. So let's just show you Canadian real quick. There's the dollar CAD pairs trade. You see it's trying, when it's going down, usually energies are going up. But this has been doing the opposite. It's been falling down. Now we're getting a little bounce out of, this is showing weakness for the metals. And sure enough, they've gone sideways to up a little bit just for 2 days, whereas it's been trying to bounce for days now here. So in other words, when it's going down like that, usually energies are going up in value, but we didn't do that here. You can see it right there. It's been gliding down, since, what is that? That's since the beginning of October. Since back in here where energies went up, normal, and then all of a sudden they started breaking down. Especially with, in other words, it was, when this is rising, energy should have been going down, and when this is dropping, energy should have been going up, and we're not getting that out of it. You can see it's just been going down. All right, now from there, let's take a look at Brent. Put the Brent up on, I think it's ZBF, right there. Nope, that's not. That's the bond. And let's see, where is the Brent? January Brent. We'll find it in a few seconds. We'll put it up with our math. Let's see, right there. It's not filling in as much. What's up with that? Let's find it. We have the shorthand one that does better, so we'll do that. And that will be BF. ZBF, I think that's what it is. And we're going to put it up over here too. Here it is on J4X. Right there. You can see it trading at the $75 area. Let's see. What's up with this morning? Not there. And then there we go. No, that's not. That's the bond. We'll find it in a second. I'm going to put it up with our math on it. I saw it just a little while ago. I clicked on it. I need to put all the energies in one spot. All the currencies in another spot. We'll have to realign this whole thing in the end. This is the beta, so I'm just willy-nillying, throwing in, symbols into the group. Let's see. We'll find it. That's 6BF. Not that. BZF. There it is. You can see it just as we see it on J4X. See it there. You see it there. It's been in that sell. Now today they're flirting with the buy a little bit there, and you can see the same thing on J4X. It's trading at 30.45, and the slow is trading at 16.67. So it's trying to lift here. It's turning into a green as we speak right there, and you can see it right here. It's moving up above the 0 line, and it's got a little green dot too. So it's showing that strength there. And that is the action. We've seen it trade down to the 75s on the Brent compared to be, what was it, 85? No more than, what was that? That was back in October 22nd, the week of October 15th to the 22nd, it was up to almost 85. So it's dropped, what's that, about 14%, 13%. All right, from there, I guess that's about really it, isn't it? Let's just take a quick look at natural gas. And, even better, let's take a look at the energy stock down in Spain, right there. Trading, that's off for the 28s, that's good. We'll see the same thing here. Same situation off that. Look at that big spike down, a 50 cent drop. Then when we go over quickly to the natural gas, right, where is it at? Right there. There's natural gas. No, that's not it. Let's find it again. Natural gas. Right there. In the States, it's trading at $2.38. $2.38. So it's dropping, and that nice 50-cent drop in that stock in Spain reflects that. At the same time, we'll put it up over here, or we'll just save it. We don't even need to, but it's getting smacked down again over here. I'll give you a quick look at it, and then we're going to get out of here. And you'll see the weeklies and so forth, and the natty gas right there. Let's put that up on there right there. There we go. You see that natural gas like this, just gliding down. This is the same contract, trade by Ducoscopy. So you see, we've been in the daily sell since here, almost the $3 area, and now we're at the $2.38.9 area, basically $2.39. So a 60-cent drop. All right, traders, we are out of here. This is Doc from North America saying happy trails to you. Until we meet again, we'll meet you tomorrow and on Tuesday. So, arrivederci, traders. Be smart, be safe.